I'm Sita Fay, Director of External Affairs.
I'm Jamie Buck, Director of Innovation.
This is Fundamental, the podcast from NYSIF, the organization at the intersection of finance, health, business, and labor in New York.
This afternoon, we have Bryan Falchuk with us. Bryan, it is so great to have you here on the NYSIF podcast. It's been some time since we last connected. At the end of 2024, you were gracious enough to be our keynote speaker for our innovation conference. Bryan Falchuk is the founder and managing partner of Insurance and Evolution Partners consulting firm, as well as the CEO of Property and Liability Research Bureau and Industry Trade Group. Bryan has spent over 25 years working with experience with insurers and advising them on strategy. This afternoon, we'll talk about a lot of the things that we've been doing since that talk and that you had and the inspiration that you provided us all with during the conference. And we've been off on a number of different directions. So we're thrilled to have you here this afternoon and just continue to pick your brain and learn from your insights and your perspectives in all things insurance. So welcome and thank you for being here this afternoon.
Thank you for that, Jamie. Yeah, it's great to be back. I am really curious about what's happened. So I feel like actually we should do this interview in the other order and I should just be interviewing you guys. But yeah. I'm excited. Thank you for having me on.
To maybe kick things off and frame this a little bit, a lot of the work you've done and you highlight a lot about working with and talking to incumbents, which is obviously very fitting for us here at NYSIF, a 110-year-old insurance organization. And with respect to the incumbents, you talk about challenges faced with regulations, data technology, bureaucracy, competitive threats, and new market entrants. A lot of those challenges align with us for carriers here at NYSIF, right? So we wanted to talk a little bit about that and how firms have found ways even under those kind of constraints to innovate and evolve. So knowing what you know a little bit about NYSIF and what you know about the journey for incumbents, maybe we can start there and you can share a little bit about what that means in the industry and what you think that means for us here at NYSIF specifically.
I'm going to say something that might sound weird to people. I look at these, like what you just framed up, I look at these things actually as more like a self-help question than it's like, oh, it's a business problem or it's an insurance industry problem. And the reason why I say that is because, let's say you're an individual who's trying to get fit, if you get your wedding coming up and you want to look good at your high school reunion or whatever, you've got all these challenges and barriers to losing the weight or, whatever it is that you're trying to change about yourself. It's really no different when we talk about a company making change. You're trying to be better. You've got all of these sort of like conscious and unconscious barriers to you, instead of it's, the tasty food around or the other people in your house are eating ice cream and you can't, like whatever that kind of stuff is. We have the technology debt. We've got budget constraints. We've got the biggest one is really culture. And that's where I think it's actually a leveling of the playing field, because whether you're a new or old company, you've got culture and you've got presupposed notions about things and you've got ways that people are and how they interact together. You got to deal with that whether you're new or old. And so that's where yes, incumbents have something built up and a startup gets to, clean slate it, but they also have the founder and founders' personalities. And sometimes that's not always a positive. So we all have to deal with this. And what I've found is like that sort of self-help work, the company needs to address its personality, its willingness, its appetite for change and disruption, or even just simple evolution. And the good news is, whatever your budgets are or aren't, or your other constraints, technology, regulation, et cetera, we all have the appetite to change our culture and to embrace change. And that is actually really freeing if you're willing to see it that way. And that's why I've been honestly really lucky to see this huge spectrum of companies. I've gotten inside a lot of them through the books I've written, the case studies I've done on them, including, one of your peers, another state fund that is a little bit older, but similar, 100 plus years old, state entity. So when people are like, well, our corporate culture gets in the way, we can't do these things. It's like, well, you're talking about corporate politics and that sort of thing. They have that, but then they have actual politics, right? They're part of the state. So if they can do it, so that's where I'm like, isn't that freeing? If we can look at another organization that has all the same constraints and more, and they've done it, why do we get to say, well, it's impossible here? And the truth is it isn't. So I've been able to see that in so many different settings. We all have the aptitude for embracing that. Even if it's tough, we still can.
I feel like I'm sitting here with the innovation guys. Part of our culture here at NYSIF was with the hiring of Jamie and saying that we have an actual director of innovation. And our CEO and executive director, Gaurav Vasisht, he's really empowered a lot of us to think differently. And as a team, we are functioning differently to think about the culture. We have so much respect for our roots and our history here at NYSIF and what we came from, how we started, where we're going, where we look at that 110 plus years as a value add to our organization, our mission, but we certainly aren't looking back. We're using that to help propel us forward. I think we have all the right people in the right positions to help move that culture forward, and we're really looking internally. I think, Bryan, to your point, a lot of that self-help, whether it is the wedding and other exercise that you're looking forward to, that introspection is the only way that you're going to be able to make that change. We've done a lot of introspection, and then that's how we're able to look out on the horizon as well. It can be very humbling. That's a big part of the organization, the leadership. It is humbling to hold up that mirror and say, where do I fit? Where do we fit? Where are we going? And how are we contributing to that?
See, if I can offer one build on that is some companies think it's a, if we build it, they will come kind of mentality. Well, we set up the innovation team, or we have someone who's responsible for that, or, we've made someone, not just a hire, but we've added it to someone's plate. That's not good enough, right? It's not enough to just have someone. I took that role at a carrier at one point. That was one of my responsibilities. And, they had this big 5-year plan that they had paid a consulting company to develop. And when I got in, the CEO literally told me on my first day, he's like, you're going to just need to sort of wait. Just keep your head down. Don't try to make any change. We'll get there. And I was like, yeah, so this was all like window dressing, just because, and I've seen this at other companies, is like they set up this whole innovation team, but it's totally on the side. It's not part of the culture because they haven't done anything organizationally to allow it to thrive or to become part of the fabric of the company. So it's a great first step, but it's ultimately a waste of money if you're not actually willing to do something with it. And so it's more than the hiring. And I think people just need to be careful about that. Is like, well, we hired this person, nothing's happened. It's like, well, that's like I bought a treadmill and my clothes are sitting on it, but I'm not using it. It's like, well, you actually have to get on it if you want it to make an impact, right? Not to keep coming back to weight loss or fitness, but...
Hey, I have hung a towel on a treadmill before. Haven't we all?
Haven't we all? I think it's great commentary there, Bryan. What's interesting here is when people ask me, you're the director of innovation. Well, innovation isn't, to your point, it's not a person, right? It's not, I'm not driving innovation. I can head up and we have a team. If we're not all thinking about innovation, then what's the point, right? So I think exactly what you're saying is it has to be a team sport. It has to be every person in the organization thinking about their areas and their ways that they can innovate, right? That's just, other than that, it's just a title, and then you're going back to doing the same old things. So maybe, and I know you have opportunities and experiences working with firms who look like us and are similar on the kind of the topic of culture and people that work and operate similar to us. Maybe you can share a little bit about how they've handled some of those things with maybe an example or two from a cultural perspective, and what that has led to them as far as helping them be innovative in a particular area.
Yeah. So I try to find some common themes when I look at this, because everyone's situation is a little bit different, or you're looking at a different area of the business or lines or whatever. So the exact playbook that someone used may not apply, but there are some things that are pretty common across the board. And one of the ones that I've seen pretty much everywhere where there's been success is giving the staff a voice and truly valuing them. And this is again where the window dressing risk comes in, where you see like, oh, we're gonna have the staff from all kinds of levels get together in these little working teams. They're gonna come up with an idea and give us a recommendation of what to do, and then we give them an Amazon gift card and they present to the leadership team and we say thank you and we never talk about it again. And that, like, obviously they don't plan it that way, but a lot of times that actually does happen. What you see differently is our staff is actually living with all of these issues firsthand: the systems, the customers, the product, whatever. They have a lot of feedback to bring into how we can do better, because that's their points of frustration or the frustration they're taking in from customers or from agents and brokers, partners, et cetera. Are you actually listening to them? Are you empowering them to do something with that knowledge and giving them a mechanism to make change? And that's sort of like, it's all corny sounding stuff, but the people matter. And the number of companies that talk about that without meaning it genuinely, they might think they do, but like in practice, do you really mean it? Have you truly empowered your people, and are you listening to them? So when they tell you like, look, this is not working well for us, what are you going to do about it? Because that's then impacting your retention of your staff, your retention of your customers, your morale, your productivity, your profit, like everything starts to matter. And innovation and an innovative mindset it's a momentum game. So when you start stifling, the momentum shuts off. When you start empowering and people are like, oh, I raised it. Look, they did something with that. They're much more likely to continue that path and to do it productively and positively. And that flywheel gets going then. So it is the companies that recognize it's in the people. And now what can we do with the people?
Bryan, you've talked a lot about the foundational pieces of culture and value. Once that's in place, and you start to see that shift and that momentum isn't stifled anymore and it's actual momentum, how do you define successful innovation within our insurance industry? What is that starting to look like and feel like? We've got everything aligned, the momentum's moving. What do you see if you're on the outside of that in the insurance industry? Specifically, we're workers' compensation, disability, we have PFL. What do you think as an insurance industry expert when you're on that window and you can say, I sense it's happening there, I see it there? What does it actually look like from the outside?
I think as an industry, we've always been about big change. You put in a big new system, you launch a new product. Like those are major things that are tangible, but take a very long time to get out to market. When you look at startups, the successful ones live much more in an MVP and iterative kind of world, minimum viable product, not the whole thing that they envision for the long term because you never go to market. When I see an organization that they're firing on all cylinders. They're getting the change engine going. It is that momentum story. So you might not have, one big complete rebirth of the company, which is A, extremely hard to do, B, extremely hard to do successfully and actually pull off, and C, will probably ruin you in the process from the change management and the cost side of it. So that's probably not the right answer. But are they making material change with a regular cadence to it? That cadence piece is where I then say, the fabric of this organization has moved. And it's like, their website's better, the tools are better, their sales are up, their profits are like all those things are ways to help measure it and to visibly see it. But what I'm looking for is it wasn't like, we did that big thing a year and a half ago and now we're, getting ready for the next big system release. It's like, that's fine. But you're having these like shock changes, which is how we've always done it. That's not the culture shift. That's not what sets you up to keep doing better because people aren't used to it. Actually, change is just too big and uncomfortable when it happens versus this is who we are. We're always looking to be better and do something with it.
Right. I want to ask a little bit now because I think we're kind of moving through this in a good order with respect to kind of foundational questions. How do you align? How do you get culture right? How do you get that right cadence that you kind of just took us through? And now if we take a look for like an overall industry focus, given kind of where you sit and you get to talk to organizations like us as well as hundreds of others. I'm curious to understand some of the industry trends, right? We've had an opportunity since we last met. We meet with insurtech organizations all the time. Right? You have a past there. You know what that looks and feels like on a day-to-day basis. So we talk to folks kind of across the business areas, claims specifically. There's just incredible amounts of technology and change, but it's not always as easy to kind of filter through and say, okay, this is the next one that's really going to be impactful, and not to diminish any of the great work that people are doing in the field, but some of it starts to sound similar, right? So how do you have the right lens with an organization where you want to maybe look to partner and bring in some of these technologies? So I guess my question, sorry if it's long-winded, but I'm asking a little bit about what are those key kind of trends, and then maybe if you have a perspective on how you go about rationalizing working through players that may look similar.
Yeah. So there's only one trend to talk about, and that's Gen AI, because if I didn't say that, you wouldn't have any of the SEO juice in this episode. But that is the trend right now. And for a few years, there's always been like a hot topic or a hot word. It was embedded insurance for a while. Predict and prevent is thrown out there. Those things are still there, but none of them is really getting the attention that Gen AI is. And I don't know if it's fair or not, but Gen AI, it's an enabler. It's not the answer. It enables other things to do. And this is then where I see the split. So the split like around what you actually do with it. So I think as an industry, and this is historically true, we over-index on expense ratio, like dramatically. And I'm a little bit soapbox standing on this one. But if you look at the past 10 years for the industry, we have brought the expense ratio down a bit. by investing billions of dollars in systems and automation, whatever. And to be fair, Gen AI is not in that investment yet because it was too new. And like data through 2024, it wasn't really hitting yet. But we've spent probably hundreds of billions over that 10 years as an industry. We've reduced the expense ratio by, and I'm going to forget the specific numbers, but something like 1.8 points across the whole US P&C market. I think actually workers' comp is a space where there's been much more of that because of the, trying to get people back to work and trying to have safer work environments. Historically, workers' comp has actually, I think, led the way on predict and prevent. I still think we can all do better, but that's where I see Gen AI being really helpful is risk selection, marketing decisions, rating, and then what do we do once it's ours to make it better? That's actually the path to profitability, not trying to shave some expense points.
The other piece of the puzzle that's underlying that I'll say that you're adding, you're not using the words and the terms, but they're here. It's all about customer service too, at the end of the day. How do we make people feel good about the product that they're invested in? This is a business to business line when you're selling workers' compensation insurance. And, when I say the word selling, we're really providing. I want to go back and say that we're providing this. It's for businesses to protect their employees at the end of the day. And return to work and caring for the injured worker is a central part of what we do here at NYSIF because that has serious consequences for that individual injured worker, their families, and that employer. There's a lot of hidden costs that go along with making sure that you have someone who can work in the workplace. There's a lot of other issues that go along with that when we talk about the culture that does that. It can be very demoralizing, debilitating. We want people connected. No one wants an injured worker to lose dignity along the way. And a lot of the story that you just told comes back to the dignity of the injured worker and centering them in this service, and then also the dignity of the customer and the business owner, that they're getting a good product that is centering them and their workforce and their well-being. There's a lot of dignity involved in the insurance industry. And I think, one of the pieces that we're talking about here, along with customer service, this is all coming down to individuals, whether it's individuals talking about different lines of insurance and property casualty and individuals here that we're employing and the individual businesses. You still need to feel good. And it's hard to talk to people about feeling good about insurance and putting those feelings together, but that is a really big part of the model when we're talking about marketing, communications, and staff. You also need to feel good about what you're getting is top notch and that they're there for you.
Yeah. Yeah, really well said.
Another thing I should say, with respect to trends, and obviously we had to talk about Gen AI, but are there things that you would say from your perspective, Bryan, that are kind of underrated? Did you feel like there's something coming and it's maybe not getting the shine that it should, and something's coming? We want to pick your brain. You get to talk to companies that we don't have interaction with. So I'm curious about what's around the corner that maybe we're not thinking about. I really like what you said about and something we're doing and thinking about very in a very focused way with respect to better risk and identifying that and leveraging areas to do that. But what else? What else is around the corner that maybe you can share with us?
I think it starts to get a bit more line specific because there's some really cool solutions in different lines of business or ways of using the tools. And so that's where, in all honesty, I'm not exposed to comp on a daily basis as I used to be. So I may not know some of the fun things brewing in your space. I think we do need to put so much more time into the bits I was just talking about the quality. And then when you look into that, there are some very cool things that are still fairly early days, but coming on the scene. So an example of one is, and you can use this in both taking in like quote requests and prioritizing what you turn around or when you turn it around. And you can also apply the same sort of logic to first notice a loss. The difference with FNOL is you don't have a choice but to respond, whereas with a quote, it could be like, that's not the right fit for us. That's not business that we're going to be competitive on. We can deprioritize that. You can't choose which claims you got to take them all. So it's a little bit different in the application, but to be able to take a massive inbox or queue of inbound stuff, whether it's requests for quotes or claims, to be able to parse that against your company's logic, whether that's risk appetite, rating plans, et cetera, or how you dole out claims and segmentation models and assignment and all that sort of stuff, so that by the time it gets to a person, it's ready to go. the fields are filled in, third-party data has been brought in, you've applied, whatever, not OCR anymore, but natural language processing and all the like hundreds of pages of PDFs or medical bills or whatever it might be, so that the intelligence is extracted from what is otherwise just information. Like I call PDF information. That's not data. You need data to be able to do something with it. So running all those tools, so when it gets to a person, they're actually ready to act on it. And so there's a tool out of the UK. They've got a global footprint, but I looked at one of their applications on the underwriting side for quotes in the sort of like not quite mid-size, but bigger than small commercial, where especially in specialty lines, you get way more inflow, hopefully, from your brokers than the average underwriter can handle. And the only way you know whether you should be competing on a piece of business is to underwrite it. So it's like, I don't know until I start working on this whether I should be working on this, which is a little bit backwards, right? Like, let me waste time on this in case I need to not waste time on this. So how could I know without wasting that time? And that's what some of these tools are able to do. They're using, rules you set up, and there's a lot of kind of configuration for that decisioning, but it's also using all of your past experience. So recognizing from your hit rate, for example, look, this piece of business, the way it's presenting is not one you tend to be competitive on, or we're seeing this movement in the trend where like this particular competitor is winning over you. So that's not likely to be your number one top priority. This other quote request is what you should work on and get back to the broker sooner on. Back to the momentum story, that means you're competing on business that is a better fit for you. You're more competitive for it. It fits your risk appetite, which means it's probably going to be more profitable than this other stuff. So you're writing better business, which improves your book. You're more competitive on it and faster to turn it around. So the brokers, agents, whatever, they're happier. They're more likely to send you that stuff because they understand your appetite. They're more likely to place it with you because you're serving them better. Back to Sita's point about customer service and like their customers too. So it's the flywheel gets going. They're sending you better business. You're more competitive on it. So you're more likely to close it, which improves your book, which allows you to be more competitive on the next risk, which gets you more of the good stuff, which improves your book. And like versus we get in this trap where combined ratio is over 100, it just keeps getting worse. And we start getting desperate and we can't figure out what we should and shouldn't be quoting until it's too late, right? So I'm seeing some things like that in particular pockets that I think it's fascinating. Like having lived, I came from the carrier side before doing this fun stuff, right? Like living with that in an underwriting team where it's like, the team's quoting all day, but why aren't we hitting? It's like, well, they couldn't figure out until 20, 30 minutes in that like, you know what, we really shouldn't be trying on this one. And in the meantime, we let 4 risks go that if we'd just gotten back to the broker on it, we would have closed it. And it's exactly what we were looking for, but we didn't even see it. So being able to figure that out. So it's sort of what I already answered, but I think it's a really big deal. And I don't think we do it enough. So I'm starting to see pockets where that's coming in. And this one carrier increased underwriter productivity, like premium per underwriter, by something like 24% in the first year with the tool. That's massive. I mean, that's like, generally speaking, that's more than $1 million at most carriers. That's pretty cool.
Yeah, it's pretty significant.
And it's more profitable. It's not just more business, it's more better business. So it's like doubly helpful.
One of the unique positions we're in here at NYSIF is that we serve as a guaranteed source of coverage for everyone. And in fact, we have a lot of folks that are coming to us that perhaps they can't get quoted elsewhere. We're looking at AI and innovation and thinking about how we can do that to be efficient across the board. When we're thinking about preferred business, all of our customers are preferred. And how do we make sure that every interaction with NYSIF is a positive interaction? Even if someone doesn't end up writing with us through a broker or as an individual, it's really important for our brand awareness and importance because we are a state entity and we are centering the injured worker. How do we make sure that people feel really good when they have that interaction in space with us? Of course, we're competitive. Our prices are competitive. One of the pieces I think about is what are you seeing when you're connecting innovation and customer service when folks are walking away from that experience and brokers are walking away from that experience? How do you see the most innovative and competitive folks finding a way to make sure that the value add is there with what they're doing? Because that's the most important piece for us, is that centered injured worker, that centered customer. And I'm telling you, they're coming in the queue and we want them all out the door, because I want, from marketing and communications and our customer service perspective, I want to say that was really good. That was a really good experience, because we have a lot of folks that are coming to NYSIF specifically for that, because their experience elsewhere hasn't landed, or their particular book of business, lends some challenges and they really need our value add support with our safety services.
Yeah. It reminds me of the experience of the State Comp Fund in California, who was the one that was in that first book. Their CEO said something really interesting to me when I was interviewing him for the book. They ballooned up to being the largest carrier, workers' comp carrier in the country when things changed regulatorily and all the commercial offerings pulled out of California. So you had nowhere else to go, biggest state in the country by far. So not surprising that Skiff became the largest writer in the country. And when regs changed again and it was commercially viable for competition to return, they drastically shrunk. And it wasn't by choice. They weren't trying to shed the business. He said it really profoundly. And honestly, this level of honesty, you don't tend to get this from executives. He said, we didn't lose the business because others competed better than us for it. We lost the business because we didn't deserve it in the first place. And I wasn't expecting him to say that. I certainly wasn't expecting him to approve me putting that in the book, but lo and behold, that honesty mattered. And I think it's a really important point is, ask yourself, if I was the customer and this was any other business, would this be acceptable? Like, would I put up with what I just had this experience with my telecom provider and their CEO sent some email about how amazing their service is and they've made all these changes. And it was like right after this terrible experience. And it's like, if you have any comments, like, please write back. So I did. And I was like, honestly, I think you should have a service failure and try to navigate it. And I think you'll see that what you just put in your email is completely untrue. And it's not just laughable, it's actually offensive because this is so disconnected from your customer experience. I don't think you would accept it. And I know you get special treatment because of course you do, because they all know who you are, right? And you know how to navigate things. But what if you be a mystery shopper? I think you'd be shocked at what you had to put up with, and it's unacceptable. And your competitors are also terrible, which maybe is why you think you're so good because the bar is so low, but being better than terrible is not acceptable. So let's ask ourselves that honestly. When you take that attitude and you have that sort of quick iteration of change, what can you start cleaning up? And I think what you find is your people want that too, because they don't like being frustrated. They don't like being yelled at when they're trying to help, right? So what are the things you can start to change on? And back to the Skiff example, they were looking at their direct business and they had something like 108 questions in the application. Of course, most small business owners have no clue how to answer any of these questions. So they started going through the app and the underwriting leaders locked themselves in a room for 2 days and hacked it apart. And they got it down to 80 something questions. And they were so thrilled with themselves. And the CEO was like, it's still terrible. This is still excessive. You're not looking at it from the customer standpoint. It's better than what it was, but it's still unwieldy. And so they said, instead of starting from 108 or whatever, what if we started from 0? What is it that we absolutely need to, and again, is it, a market of last resort, they take all comers, their underwriting requirements are different than a commercial competitor. So they didn't necessarily have to ask all those same questions. And they ended up with something like 19 on average. And you could actually do it with fewer questions and you can get through the whole thing in under 2 minutes, which they then picked up and moved to their agent and broker business. So they extended that. It's not just direct. What if we made it better for everyone? And so that flywheel got going. So they didn't accept that even if we're better than what we used to do, that it's good enough. I may have said this when I joined you guys a year ago, but I talk about bank robbery as a really good example to put a pin in it is, if I robbed 10 banks last year and this year I only robbed 6, that's fantastic. 40% reduction in bank robbery, but it is important to remember you're not supposed to be robbing banks. So the answer is 0. It's not 40% less. I applaud the progress, but let's recognize is that actually what we're going for? Just robbing fewer banks or being slightly less unacceptable? And I think the reality is we often know the true answer to that, but maybe we're telling ourselves a story or we're that CEO's email to me is kind of window dressing and fake. I think we can be honest with ourselves about it. And it's actually not that hard to do. The implementation might be tougher in making those changes, but it starts with that recognition. And then you can, off to the races, start making things better.
Well, the honesty and authenticity, I think, as I am a consumer myself, right? We are all consumers here. You can feel that. You can see it. You can look at the window dressing. And what will happen is even if you come in and say, this sounds really good, this looks good, you never, ever forget that experience. And it doesn't matter in what line of business that you're working with or that customer experience means anything. And truly, we still have to be very competitive with others, regardless of serving as that guaranteed source. We're accountable, and we're accountable in a lot of different ways. And I think as a state entity, similar to the fund that you're talking about, but also every day. There's accountability with our own employees here, back to culture, that we have to do. We have to provide them an environment where they're able to serve the customer and not have to worry about what's happening externally and internally and are we doing the best thing. There's so much pride. Our contact center, if I don't give them a shout out, the pride that I have within the contact center for that first call resolution and having people really have that, our client relations team, having someone at the other end, our new small business team that we've worked with to provide. You mentioned small businesses, right? 190 questions. I can't even imagine, but we're here to help people because comp can be complicated. Insurance, government entities, a lot of the information that you can collect internally because you're trying to provide a service and you do need that level. We also have to understand that not everyone has access to that or access to the resources. And I really think this comes down to that theme of accessibility as well. And there's dignity and accessibility that go right along with innovation. It's customer service that we're looking for to provide and to receive in our everyday lives.
Exactly right. I think one way to pivot and on that theme of kind of honesty, right? We try to be honest with ourselves here, and we're learning, and I think that's important. That hits back to culture too. But we're kind of in a state of continuous learning. That being said, we're learning how to do a podcast, right? And we have experts like Bryan, have you hop in with us, but maybe share slightly different than talking in the weeds on all things kind of workers' comp specifically, but maybe talk to us about what do you think the impact is on, this is what you do for a living, right? And what's the impact on having a podcast in the insurance space? What's that mean for folks like us who are trying to break in there and leverage different areas to communicate what the good work that's happening here and what we want to do in the future?
I think it goes to your point about like continuous learning, right? Like, I hope no one's ever done with that. And I think opportunities like this or vehicles like this are so important just to get people thinking, challenged in their thinking, considering, even if it's not relevant to your space, but listen anyway. Just give yourself that kind of mental spark to be like, oh, that's interesting. I see how that might apply to where I'm at, or I never thought about it that way, or like, yeah, it has nothing to do with me, but that was a cool story. I'm listening to the Acquired podcast. I'm late to the game, and I'm going through the entire back catalog. And there's some episodes I'm like, I don't care about this company or this
right.
space, whatever, but I'm listening anyway because it's just interesting to hear like, what was the business issue? How does that break down? How does it play out? The hosts have good banter as well. Like it's entertaining, but I find it's no pressure for the two of you, but so far so good.
Right.
I find that it's really valuable in just feeding my mind and giving me that thought provocation, if you will. And so that's my intention with my podcast. And I did say, I was a guest on another show, and I said, I'm happy to be wrong. And I listened to the episode, and they did a wrap up after I had dropped off, and they're like, he said he's happy to be wrong. I don't buy that for a second. No one's happy to be wrong. And it's like, no, I actually am. Like, I don't care if I'm right or not. There's nothing to do with, I hope my points are informed and that there's validity to them and everything. But if I'm wrong, that's okay. Did we talk about it? Did you educate me on why? Can I understand that? Can I go forward with it? Shift my thinking? Like, so maybe I'm not happy, like I have no problem being wrong. Is that it? I think a lot of us need to get with that kind of mindset is like, you don't have to agree with me, but will you at least talk to me about it?
Bryan, the podcast is called Fundamental. And we ask all of our guests, regardless of the industry that they're in and what they're doing, a couple of fundamental guiding questions. One of them I really want to hear about is, who has been a mentor to you? How did they inform who you are and how you lead today?
So I have two people who come to mind, one in the industry and one out of the industry. I'll give you the industry person. There's a guy named Andy Pincus who, when I met him, was the chief claims officer for what was XL at the time and became XL Catlin and then XXL. I say this very awkwardly, but Andy and I, it's like two people at a dance who want to dance together, but just never meet up. Not that we would ever dance together, but I've almost worked for Andy, I think 3 times now. And it just didn't click. There was a reason why I had to take a different job, or he ended up leaving one of the companies before I would have joined. But we just connected, and there's just a clarity, a truth, a support in how he goes about things. He's super supportive, but he also doesn't suffer fools or, bad performance, but does it in a way that's, I think, like really human and building and growing. I worked for a carrier where I was there under one CUO and then the next CUO who ended up becoming their CEO later. Both incredibly tough people. The first one, you'd go into a meeting, like I presented the business plan, and he just beat us up. And it was brutal. I'd just flown to London, like didn't sleep on the plane all night, get in there to present the plan, and I'm like totally beaten up, but so much smarter for it. The second one just beats you up. And I'd walk out and be like, I don't know what we gained from that. I don't know what we're doing next. He's just being tough to be tough. That's not valuable. So this mentor, Andy, is, I think he can be direct and tough and everything, but you never feel just beaten over the head for it. And God, you feel smarter no matter what. He's a lot more human than the guy in London who, yes, you felt smarter, but also exhausted. I wouldn't say Andy ever exhausted me. But yeah, amazing guy. And he's been there supportive of me throughout the last 10 or so years, even though I've never actually worked for him, which is kind of weird. Just keeps almost happening.
I don't know. You're going to have to report back to us when that dance does happen.
Yeah.
I think that'll be very interesting. I always have this saying I talk about here a little bit with Jamie. It's about timing, fit, and talent. And it's interesting sometimes when those three align, but when they don't, still where you may end up. You know, the other fundamental question I'd like to ask you about, what's a fundamental principle that guides you?
That's a really tough one. So there's something I would say I always look for in a leader. And so it guides me in the sense that I'm sort of checking myself. If this is how I'm behaving, that's humility. I always tell people, if you find a leader who lacks humility, leave. Don't work there. The place is not destined for success. And I certainly fail on that front, both spotting and behaving at times. I think everyone does, but I try to lead with humility up front. So that's one thing. But I sort of have this life phrase or ethos, and bringing it right back to self-help. It's the phrase is do a day. And I think actually it makes a lot of sense in the context of the work we do in insurance, where you're dealing with ultimately the worst thing that's ever happened to a person. And the path to recovery, whatever that looks like, is a lot and daunting. And I spent the last 10 or so years in claims. So we lived with this really tough, every day it's like tragedy, right? Very, very difficult stuff. How can you possibly navigate through that when you look at the scale of everything that's hitting you? And the reality is you're not solving everything today. You don't climb to the top of the mountain in one step. There are things in front of you that you must do, and that's what you need to focus on. And let's focus on what's right in front of that first step, and then we'll get to the next step later. That also means kind of the opposite of just grit your teeth and get through it, because that doesn't work. Eventually you're burnt out and you're still feeling the weight of everything. You're just not really admitting it. So it's an honesty with what is ahead of you, but bringing your eyes back to what's right in front of you without having to worry about what's next. I think the whole world felt that in the pandemic, where it's like, how do we get through this? And, a lot of businesses shutting down and people were losing loved ones. I mean, it was a terrible situation. We're very much in a different place today than we were then. I don't know how many people actually thought there was a path out. It's like, how can I see past any of this? To bring it to New York City, 9/11, this is a crazy thing. I don't know that a lot of people know this. The search and rescue dogs stopped searching because they were getting depressed. They just kept finding people who, had perished. And so they were shutting down. So the rescue workers were actually implanting live people, volunteers, firefighters, et cetera, so that every few bodies, the dogs would find someone alive. So think about that. That's a dog, right? That's like, there's a different level of consciousness and awareness. Dogs are amazing. I'm not putting them down, but the complexity that we process, the awareness we have of all the terrible things that lie ahead, imagine how we might feel if we were in those same shoes. So if the dog needed that, how do we reframe for ourselves the scale of what is on our shoulders so that we can do something right now to move ourselves forward and survive to get there for the next step?
I hate to wrap this up, but I want to thank you. It's been a fantastic chat, and I'd say you're 2 for 2. 2 times now.
Awesome.
You've been super gracious with your time with us, and we really, truly can't thank you enough. And a lot of the things that we talked about here, the continuous learning, that's going to continue when folks have an opportunity to play this back and have an opportunity to hear from you directly. So I just, on behalf of the team here, just really wanted to thank you. Thank you for just being a good human, right? We reached out to you. Last time we talked to you was a year ago. You hop right back on the phone with us and gracious with your time and these wonderful insights. So, I mean, kudos to you. And we really do appreciate that, because you don't have to spend this time with us, and you do. And I say that, 2 for 2, but that we much appreciate that. So thank you.
Well, good goes round. So I fully believe when the right people reach out, you just got to be there for them. So thank you for asking me again. The door's always open. I'm happy to help out.
that wraps it up. Bryan, thank you so much again for all the insights this afternoon. It's just wonderful to speak with you again. We'll look forward to connecting with you again soon and just keeping in touch and learning together.
Thank you both very much.
This is Fundamental, the podcast from NYSIF.